So candlesticks. Now, I can't remember because I know that you weren't under me, but I can't recall if this was something that you were good with, like the anatomy of candlesticks, how to read candles and things of that nature, or what?
Yeah. Yeah, this is pretty self-explanatory.
I can explain it. I just didn't want to. I didn't want to inundate you with information that you didn't have, but I can give you my little notes. So I was just asking.
Sure, I'm open. It's been a while, so sure. But yeah, go
Okay,
ahead.
absolutely. Okay, and I'm saying that because it's four of you all in total, and I'm trying to keep in mind who told me what, and just trying to be respectful of time too, because I know you're like me, we're winding down. So candlesticks, we know that candlesticks have the body, and then there's going to be a wick on at least one, if not both sides. And so this represents the range between the opening price and the closing price of that candle, whether it's a 1 minute candle, an hour, or a daily candle. And so the wick shows the lowest price during this time frame duration, and then the high shows the highest price of that time frame duration. And by examining the shape and the color of the candlesticks, we can gauge the sentiment of the market and possibly potential future movements. So the body represents the distance between the open and the close, as we've discussed. And then when we have a large body, typically that means that we'll have strong buying or selling pressure, which means a lot of volume. And then we'll talk more about either small bodies, which kind of show us indecision. So that's the anatomy. And then like we just discussed, this is the close and this is the open. So the first transaction of the session or the time frame. It doesn't necessarily have to be Asian, London, or New York. It can be the 1 minute candle or the daily candle.
Mhm.
You know that green is bullish and then red is bearish. I know for mine, when I start to share my screen, my bullish is a purplish blue, and then my bearish is more of a pink. But I feel like we kind of get the idea of that one. All right, and we talked about the highs and the lows, the lowest price that was printed during that time frame and the highest price that was printed during that time frame. And then momentum. So the candles also show us market control and volume, right? So high volume or a large candle usually shows that validating the move's conviction. So this right here is showing like price is really trying to move down. The sellers are creating a lot of pressure, and there's minimal wicks with a lot of volume in the body. And then on the inverse, indecision candles usually have low volume, and they can possibly indicate a false move or a trap. So this candle right here, even though it's red, bearish, and it has this a lot of wicks on the top and the bottom, we may not know, okay, price is still printing as a bearish candle, but this doesn't necessarily tell me that it wants to continue to sell, because they're clearly the buyers and the sellers, there is some type of indecision or some type of imbalance. And you need to wait for the next candle to see, okay, what is actually happening. And yeah, so that is high, open, low, close of bearish and bullish candles, as well as large bodies, which exemplify a lot of volume, and an indecision that has less volume. And then these are just some summary notes that I created. Do you want to screenshot these, or you want to wait for the presentation?
I'll wait for the presentation.
Okay, then I will not keep asking. This is focusing on the actual what the candles are showing us. And this next slide is showing how we can identify who's in control or get a better explanation of who's in control, whether it be buyers or sellers. And then this one is showing us, and I need to update that because I don't know what that is. But this one is showing us how volume can help us to identify, confirm price. And we'll go a little bit further into that in the next slide. Confirming price. Price is going to either do two things. It is going to either reject or it's going to respect. And we'll see that by how candles respond to key levels. So I do not necessarily teach support and resistance, but it is synonymous with key levels, which I incorporate. I identify specifically, actually it depends, but 15 minutes for sure in the daily are something that I pay major attention to as it pertains to continuation and reversals, but we'll get into that. So rejection is basically price is going with, full body candles into a higher time frame key level, whether it be a fair value gap, an order block, or just a previous high or low, and then it rejects. It doesn't break inside of it, it immediately comes back into the opposite direction. So that must mean that either the buyers have exhausted here or the sellers are coming into play. And then price is giving us maybe a retrace or a reversal in this area. And then inversely, not inversely, but as a result of some let me slow down. Sometimes it's as a result of, and sometimes it is actually just a continuation. When we have price just continue after whether a rejection or a continuation in general, we know that momentum is going to give us these large body candles with minimal wicks. And in this picture, you can see how the wicks get smaller and smaller until prices continue north. All right. So this is just an example from my trading view of a rejection block or rejection candles from a higher key level, which is a previous day high right here. So price was slowly coming up, minimizing in volume on both the buyers and the sellers, and then came up here and then could not break above. And then sellers came into play and then the price continued to drop. This is just a real time example. All right. And so candles are super important, but also waiting for candles to close is even more important. I found that most likely the safest bet is to wait for a candle to close on the 15-minute because it has more significance than if you're to wait for a 3-minute candle to close outside of a higher time frame key level, right? So when you enter into a trade before the candle closes, and not waiting to see if it's going to retest or if it's going to continue in your desired direction, you are like trying to catch a falling knife. You don't necessarily know. Of course, following our rules, we are hopeful that it'll go in a certain direction, but it's just very important to select whatever time frame candle you want, wait for that candle to close, and then enter in after your next criteria prints. All right. So let's keep going. And now into futures. So I think that this is the one of the biggest things because we did not deal with futures when we were working with forex, but it is very similar. So futures are standardized contracts where buyers and sellers agree to exchange an asset. So that asset can be an indice like NASDAQ or SPI or SPY, excuse me. It could be oil, it could be gold. There are even people who trade currencies in the futures market. They don't have the same like USD, CAD, like CAD, but it still has a ticker that you can trade in the market. So, of course, we know that we don't have to own the asset. We're just trading the price movement. And that means that we make money whether price goes up or down. And yeah. So trading futures requires understanding leverage as well as contract values. And we'll talk about that in the slides to come because I know we worked with ticks and that wasn't necessarily it doesn't translate quite the same because of the names, but literally just looking at measurement of price going up and going down and making money with those movements. All right. The difference with this futures as it pertains to any of the others. With stocks, people invest in having an actual piece of the company. With forex, that we used to trade currency pairs, and then we were trading whether or not price went up or down, depending on the exchange rates between whatever currency versus the opposing currency. With options, people are typically doing the same thing, but it is people are making sure that they are taking their profits or taking their exit before the price expires. And that's a whole nother game because the theta and the delta, that's something I never got into. But with futures, as I just explained, this is cleared. I'm sorry, these it's cleared through exchanges, just the Chicago Mercantile Exchange, the New York Stock Exchange as well. And we don't have any ownership, which is cool because we don't necessarily need to own anything. And it is similar to Forex because the market is open 24/6. And I use that roughly because it closes on Friday and then it opens back on Sunday. And more so 23/6. So very similar to Forex in that capacity. Then with futures, you only are required to, you only have to have a fraction of the contract as margin. And we'll talk about that. So you don't have to have, I don't know if you remember when we would sign up with Hugo's Way and these other brokers and they'll ask you about the margin. Those things were a little bit different because we were working with unregulated brokers, but the concept is still the same. And I'll talk about that in a couple more slides. And then futures is also regulated by the Commodity Futures Trading Commission, which is a federal agency and it regulates futures and option markets. So yeah, it's regulated just like all the others. This is just an example of a chart, very similar to all the other charts that we've seen. And yeah, all right. So prop firms. I think that we talked about this and you had not heard of this, but this is a great way for you to get started. I didn't necessarily start this way, but I quickly made the shift once I found out about it. Prop firms allow for traders to be able to access large funded accounts without needing to have actual capital up front. So instead, you pay an evaluation fee, and then you use rules to be able to prove to them that you're disciplined, you manage your risk, and then once you pass their challenge or whatever the evaluation is, you would pay a activation fee, and then they allow you would have access to actual capital. So this is why I really want to reiterate discipline because prop firms have specific rules on top of the rules that you're going to already have, and it would definitely be in your interest to incorporate all of them so you can stay in business with these prop firms as long as possible. All right. You have any questions? Go ahead.
About when you say like it's open it opens Friday and closes Sunday.
It opens, so like the market will open, you'll close tomorrow at 5. And then it'll open again on Sunday at 6 p.m.
You said 6 p.m.? Oh, okay.
Yep, very similar to how to the Forex market.
Okay. That's all I had.
Okay, cool. And this gives a more of a breakdown of what prop firms are. They demonstrate skill and discipline by passing the evaluation process and then allowing you to be able to use that capital. And as I stated before, there's an evaluation process. And then once you're funded and you pass that process, pass that challenge or whatever the process is, you become funded and then you have access to be able to have payouts. With those payouts, of course, because there's a partnership, you're utilizing their capital. They will take a percentage. Different prop firms have different percentages or different profit shares, but yeah, we have the opportunity to make money, and of course, they're going to make money as well. All right, so here are some of the rules that are important, and then different prop firms have different rules, but most of them, all of them, still have these same 4. So there's a maximum that's allowed. Every Top Step has a maximum in general. It doesn't have a daily loss, but like Apex does have a max loss. Like you can't lose past a certain amount depending on the size account that you have in one day. And sometimes it'll just close you out for that day, or you might actually lose that challenge and have to reset it. Some of them also have a trailing drawdown. So if you are continue to say if you won a certain amount of money, but then you lost a certain amount of money, and if it doesn't match with whatever their threshold is, that could also have some issues with your equity, position limits, not being able to use just any amount of contracts that you want, which is important. You shouldn't want to. And then you can't hold trades overnight while you are in the evaluation phase. Now, once you get funded, if that's the route you decide to go, you are able to hold trades, I think, within a week's time frame, but you just definitely can't do it during the initial process.
Okay.
And some of the pros and cons are as stated here. You actually absolutely will have access to more capital, so you don't have to invest as much of your own money. And then some of the cons are some of the rules that I just stated. And then when you're deciding whether or not you want to use your own, it's totally up to you. If you have the funds to be able to do it, then that'd be great. Some personal brokerages start with a minimum of $1,000. I think Ninja Trader does. And then, or if you use your any other of them, they all have some type of minimum. Or you can go the prop firm route. Yeah.
Okay. And based on your experience, like you do recommend the prop firm, or would you say it really does depend on the person?
I would say it depends on the person. I think for me, because I was making I was making small gains while I was trading my own capital, and that was fine. But once Top Step, I'm sorry, once prop firms, which I do trade Top Step, once prop firms was introduced to me, I was like, okay, it's still taking me a long time to make profit. I might as well go ahead and get funded and utilize their capital instead of having my capital tied up. You know what I'm saying? So if I have a Ninja Trader account and it's $2,000 in there, and that's great, but let's say I made $50 today, I lost $100 yesterday, I made another $200 the next day. Like I'm incrementally going up and down, and that money is still sitting there, which is fine. But I'm just like, if it's still got to grow anyway, I might as well just go ahead and use a prop firm and be able to take out profits when I would like, since I'm still not taking out profits from the other $2,000 that I had in my Ninja Trader account. So I think it depends on the person, but I just would recommend prop firms since the since you have access to the money.
Okay.
And I don't have an affiliate code or anything crazy like that. So if you signed up for one, it would be me just showing you how to go through it, but like I reap no benefit from it.
Okay. Even if you did, that would be fine.
Okay, that's true. I just don't want you to feel, me. I'm not swaying you either way, but I do encourage that, because even if you are, as you're practicing and you're learning, worst case scenario, you blow an account and you have 50K virtual account that you are working on getting funded, and you paid 40, those accounts cost $49. Worst case scenario, you blow the account, you lost the $49. And you just have to pay another $49 to sign up again. You know what I mean? So it's like, although that's not ideal, it gives you the opportunity to have lot more, a less expensive trial and error process.
Yeah. I like that way better than signing up, investing 500, losing the
Yeah,
500. And I think it helps erase like the fear a little bit.
I guess so. Because I guess on the initial part, because it's virtual money, but you still would trade it as if it were real money. Because the
Yeah.
goal is, of course, after you get past the challenge, you are able to pull out profits. And I actually still trade very scary. Like I trade very, and I don't know, and it might also be because I still work in my corporate job, and I feel like I just need just enough, and I do need just enough. Like today, I made $246. That's enough. I don't need to like have $1,000 days every day. No, my check still came also. So, that it works for me. But some people are just like, I have no fear. Like I'm just gonna get everything I can, and I'm not that person. Oh, okay. So these are a couple of firms that you can use. Whether the prop firms are the proprietary firms, these are the ones that I recommend. And I say recommend loosely. I know people who have used my funded futures. I haven't personally. I've used Apex, is not my favorite. Top Step is consistent. You're gonna get your money as long as it's not anything like fraudulent. I made $50,000 today and I had 100 trades trying to do it. Like they might say, yeah, no, you didn't even trade responsibly. We're not going to honor that. Like they might do that. But for the consistently, I don't know anybody who has not received, who's had an issue with funding with Top Step or my funded futures. With Apex, possibly. I tried Apex, it didn't work for me. It's open. And then here are some if you would like to add your own funds to the account, your own funds to your personal account.
Okay.
And then I just like to explain this why prop firms are legal. You're in a partnership. We're in a partnership. So the firms are not selling you trades, they're not giving financial advice. You're providing access to your own capital they're providing access to their capital using their rules. They don't hold deposits. So you're not going to send them a whole bunch of money to trade with. They are regulated, like I stated earlier, and the business model is open. You can see it. It's open documentation, and then they get their money from, of course, the evaluation fees as well as the splitting of the profits from traders that have success. And this is just what the dashboard looks like. This was my account. I was working on a funded account. I think it was in September. And so it'll show you how close you are to actually getting being funded. And this is Top Step, your best and your worst day. It also has some other analytics that are in here. And yeah, so it's just a screenshot. And then, so next, we're going to talk really quickly about contracts, margin, and leverage. All right, so we definitely need to understand this. So futures, every future has a contract size. So with NASDAQ, which is NQ/MNQ, NQ is the mini, however, it's the bigger one. So one contract, when it moves 1 point, is worth $20. And so the ticks, which every point has 4 ticks, it's worth $5. I know that might be a lot. And then with the micro,
Wait.
I know.
Is this for all of them or is this just for NASDAQ?
Say it one more time.
So is this for all, like whatever we would do as a future, or is this just for NASDAQ?
No, it's not. So not all of them. So like gold, if I were to trade gold micro, it is $2 per point per contract.
Okay.
Versus, and I think that I'm sorry, not $2, it's $10 per point. Is it $10 per point? I stick to just NASDAQ, honestly. But for example, ES does not trade the same as well. Like all of them are not the same. And I guess I can find, I have some type of Excel spreadsheet that has the different ones. But to answer your question, no, they do not all have the same dollar amount for each contract.
Okay.
Great question. So with margins, that is the minimum amount of capital that you need in your account to open the trade. So with futures, you can have a lot less margin than stocks, which is why it's become so popular, but also why leverage is high. And then leverage allows you to control a large position with a small amount of money. However, if you win a lot, you can also lose a lot. So that's why it's also important to have a proper risk management plan. That's a non-negotiable, and we'll talk about that as well.
Okay.
All right. So before I told you, got it all mixed up. ES. So here for the main, these are the larger ones. These are the minis right here, the NQ and ES. NQ is $12.50 per tick, which means it's $50 per point. NASDAQ is $5 per tick. So it is $20 per point. And so each of these are 10%, or yes, is 1/10 The micros, I'm sorry, are 1/10 of the minis. So like here, MES, instead of $12.50, it's $1.25. And then M and Q, instead of $5, it's 50 cents. Does that make sense? It's 1/10 of what the mini is.
Okay.
And so you have your decide which one works for you. NQ work moves pretty quickly. S moves in conjunction with it, but not quite as quickly. And so this is the impact of contract size. So each future contract has a fixed tick value. And then larger contracts, of course, magnify the gains as well as the losses compared to the micros. And then prop firms set strict daily loss limits or maximum loss limits to help you control your capital. So you don't want to risk getting below, say, $2,000 for a 50K account, or you can be terminated or your account can be under review. And so we'll get deeper into what that looks like when we get on the charts. So an NQ, one of those contracts, if you lost 40 ticks, which is 10 points, that would be a $20 loss, a $200 loss, and that happens fast. And then for over here, it just magnifies, is multiplied by 4. So yeah. All right. So margin is like a security deposit. You put down a fraction of the total value to control the whole contract. So each futures contract represents a larger value. So not to get too deep, but we are only trading a percentage of that. So the margin creates the leverage, and leverage is the ability for us to control a big amount or a large amount of money with a small stake. And so prop firms allow traders to bypass large upfront capital by providing funded accounts, but daily drawdown limits still apply to control risk, like I've been stating. All right, so the advantages of leverage and the risk of leverage, the double-edged sword. So this margin creates leverage, which is the ability to control large amounts with a small stake. But when the market moves in your favor, small moves, you get big wins. And then on the inverse, when the market moves against you, even if it's a small move, it could be a big loss. So that's why it's important to, again, implement discipline and risk management and anything with futures trading. All right, so this is just I'll send this to you, but this is just a place for you to start as far as how much you'll risk in your trading. So 1 to 2%, of course, if it's your personal account. If it's a prop firm, you might could be a little bit more flexible because, like we said, if you do lose that $50 because you blew an account, then it wasn't like it was your personal savings or anything like that. And it can be replenished much easier than in your personal account. Not encouraging you to do that, just saying. All righty, and definitely encourage you to start with micros. I probably would never stop trading micros. I just don't see the benefit. I'm able to scale in and out of positions much quicker. And then here is a summary of what we just discussed with mindset, discipline, candlestick basics, prop firm pathway, as well as contracts, margin, and leverage, and then some more basics about futures. And now for the fun part, because I couldn't help it, homework. All right, so you have some assignments. First, you are to journal your why, potentially a top trading emotion that you know that you might, that resonates you with you when you saw it, and also that you might have experienced previously with trading. And then also one thing that you want to implement into your routine. Like I know that you are really transforming like your diet and your all the things. One more thing that you might want to reiterate in there with trading. And then we'll work on building our routine, our anchored routine. And then I want you to look at an asset, whether it be NQ and MQ, they move the same. The values are just the amount that you can leverage, lose, or gain. This is different. Or ES or gold or any of them. Look at an asset, and I want you to observe the anatomy and the movement or the printing of candles in real time, and then document your observations. And here are some of the the questions that you can help. Let me slow down. Here are some of the questions that can help guide you in what you're looking for with that candle behavior, as well as what the market is telling you, whether it's the buyers are control, sellers are control, or there is indecision in the market. All right, so this is MNQ, and this is, I'm just showing you, this is what happened earlier today. So is there some specific you want me to show you?
No, just how to like correctly do the assignment for number 3. So I would come on here and just discuss what I'm looking at as far as the candles for a certain time frame.
So like we can go to the 15-minute. And right now the market opened at 6. So we don't have it's Asian session, so there's not a lot of volatility. But going back to the questions, let me see. So for this example, for the first question, it says, how long does each candle take to form? Of course, we're using the 15 minutes, so it's doing that. But is it moving fast? Is it moving slow? Is it like bouncing around erratically? Doesn't have a real direction? And then you'll just tell this was a 15-minute candle during this time. And then for the second one, like, what is the size of the body compared to the wicks? Like you might say, okay, this candle at X, Y, and Z date did this. And then what direction does it seem like price wants to push and go to? On the 15-minute might be difficult for us to make that assumption. But looking at this, we might say price wants to go up or down. To me, price, because of what happened earlier today, I'm saying that price wants to go down. It's rejecting from this 15-minute fair value gap, and I feel like it wants to go down. But that's my observation in real time. And that's why I want you to be able to do it tomorrow if you can before the market closes.